Good day, everybody. Welcome to today's session. It's called KPIs tracked by high performing CAS firms. So we've got lots of numbers to look at today. My name is Ben Gabriel, and with me is Amy McCarty. Amy will be taking us through the majority of things. Amy, how is it going on your side?
It's going well. It's a good day. I think it's Wednesday. Um, and I heard that we were looking at metrics inside of accounting firms. And so I decided to show up for this party today.
Well, I'm glad you're here, and I'm glad everybody's here. I've got a good group coming in. While I get things started, the first thing I'm going to do as people join is I am going to drop, and I'll do it more than once because once if people join after, they don't quite see it. But there is now a PDF of the slides that we're going to go through today. So all the numbers and metrics and stuff that Amy talks about and we talk about, they're all right there. So I'll do some of the intro. So we are good for 1 hour of CPE today, everybody. We'll ask a total of 4 polling questions. You've got to answer 3. That is par for the course. So please answer those 3 polling questions for CPE. We love questions too. So you can use the Q&A button in Zoom. You can also use the chat area in Zoom. That's where you'll see a PDF that I dropped into the slides. You can chat us questions. You can send them through the QA. We'll do our absolute best to answer the questions. We may try to grab them during the little polling breaks. And also Rachel and Christine on our side are here as well, and they may be able to help with questions too. When you close out of the webinar, you will be presented with a survey. Please answer the survey, give us any feedback, let us know how things went. We do review those and we appreciate it. Amy, I think that's pretty good on intro and some of the CP related things. You want to talk through the learning objectives?
Yeah, so while we're together today for about an hour here, what we really want to talk through are just KPIs, important internal KPIs that are going to help you progress inside of your firms. And then also, what are the outward facing ones that you can look at to help measure how you are doing compared to others, right? Like comparison is the thief of joy, but there are certain things that we want to know the benchmark. Like, where should we be inside of our accounting firm? Are we on the right path? And so we're going to look at both. Judge yourself against yourself, and then also compare yourself to others inside of the accounting industry. So those are our overarching objectives, but really, like, simplistically breaking down our agenda today, Ben and I will just talk about, like, why even track KPIs? What's the importance? What are the ones we're looking at internally? What are the ones that we're comparing outwardly? And then when are we looking at these? Like, we got other stuff to do too, right? Work on client work, figure out how we're achieving all the goals we've set. So that's just kind of the flow of the session today. So if you're here, you're running an accounting firm, you're involved in running the accounting firm, you want to make sure that you're progressing forward in the path and the goals that you've set. So let's dive in. A little bit, really just quickly, I am Director of Advisory here at Collected by DBA, right? We're a community organization of almost 50 accounting firms across the country, all together to help push each other forward, to continue to learn and grow, each of us moving our firms in the direction that we want, right? And so in addition to Collected by DBA, I'm also Director of Operations inside of Dillon Business Advisors, so our own accounting firm, which are the numbers that I will be sharing today. So I will share DBA specific numbers, and then Ben and I will talk about just inside of Collected by DBA, what's the averages that we are seeing from our firms. So you get a good idea, like, where does DBA live? And DBA is by no means perfect. Some things we have figured out, other things we're still figuring out, right? It's a constant learning evolution of just progressing forward, doing well with the information that we currently have available to us, right? And as we learn new information, we continue to improve and make changes. So let me give a little bit of a background on the monster that was the tipping point for DBA to start to make significant changes in how it was functioning as a business, right? So way back in 2011 is when Marcus started the practice, right? And so DBA was founded, Dillon CPAs is what it was called back then. It might have been a different name. Apologize. Rachel or Marcus are probably on and can correct me. But so back in 2011, it was founded, financed by a client block, 400,000, right? And you can just kind of see like what happened in 2011 is initial purchase, another acquisition, um, a former employer, a third acquisition there, and a team member. And then for the next 3 years, it grew organically, 20% year over year growth, right? The team continued to grow. In 2016, it was approaching 1.5 million. Another acquisition happened, like a 500,000 acquisition, and the team continued to grow, right? And so then in 2017, it was about $2.2 million practice with 2,000 plus annual clients, right? And so it was just taking on whatever would come through the door, saying yes to everything, just making it all happen. Well, you can imagine that what that looked like was just high stress in 2017. The practice was running Marcus and Rachel. Marcus and Rachel were not running the practice, right? And so realizing that that wasn't sustainable is really where the tipping point was. So many of you maybe have already reached that tipping point. Maybe you're getting close to that tipping point. Maybe you know that there is what it is today is not what you want or is not sustainable for you to continue on that path going forward. And so today is any good is what is the saying, Ben? The best day to plant a tree is like 10 years ago, 20 years ago. Second best day is today. Did I get that right?
That sounds right. I would not argue with that.
You know, today's a good day if you've been thinking about this. All right, what is the next step that I need to make? So we'll look at some KPIs. You can assess your numbers, see where you're at, and then set a goal. And that's really what, a goal, not having a goal just means that looking at numbers is worthless, right? Like we can look at numbers all day long, but if we don't have a goal or an idea of the direction that we want to go, then what's the point of looking at those numbers? Okay, one last thing I want to paint, just history's good to paint the visual here so that as we get into like today's numbers, it makes a little bit more sense. You have some context there. So I didn't go all the way back to 2011 in this graph. Probably could. That's a lot of data on a single graph, which is hard to look at, right? But to be perfectly honest, the purpose of this is to show how things have transitioned over the last few years, right? And you can see the yellow on that graph is CAS revenue. So that's monthly recurring revenue. So back in 2017, when there was the breaking point of like, this is not sustainable, we cannot keep moving forward like this, that is when the decision was made to focus more on monthly recurring revenue. And so it's not an immediate overnight thing, right? Like many of you who are listening right now, like you've been working on this inside of your firms too. And you're not turning the corner and all of a sudden like sunshine and rainbows and unicorns and you're all MRR and everything's great, right? It's a slow and steady progress, which is what I wanted to display with this graph. Like MRR or CAS is what it's called there, continues to grow. And that has been the goal focus ever since 2017, right? And so setting goals and communicating those goals to everyone on your team is super important to have the accountability to keep moving forward with those goals. And so, Ben, we just talked the other day about firm goal setting, right? And just how important that is.
Yeah, we did. Just getting together with people, everyone at the firm periodically. It could be once a year, maybe it's twice a year, whatever the frequency is. And ultimately, I like getting on that proverbial same page with everybody. That's the biggest goal that I always have for those kinds of meetings, Amy. And one of the things that's getting on the same page with each other is what is it that we're working on? How many new clients might we want to take on this year? Those are those same pages. Those are the things that are on that page. So, yeah, getting together, sharing the goals and working towards them, to state the obvious, right? that's how you get to that next goal.
Yeah, people need to know what they're working for, right? Like your team needs to understand. So for 2025, this is our hitting our goals here, right? We're on track to hit these goals. We're what almost halfway through the year. So for 2025 goals, 3.5 million gross revenue is our top line goal. 15 new clients added throughout the year. We are very intentional about the clients that are coming on, and then the motto that we have around here is the goal is growth, not comfort. I think that's a John Acuff quote, if I'm not mistaken, but it is just helping. And it's not just growth, like not just top line revenue growth. It's growth in pushing ourselves, pushing us out of our comfort zone, and is that additional clients? Is that learning new tools? Is that learning how to be better advisors to clients? It's all of the above there. So let's jump in. And Ben, do we need to do a polling question?
Let's do a poll. I mean, let's do our first poll. So here's poll number one. It'll be number one of four. How often does firm leadership review the financial health of the firm? You can interpret that, but how often do people sit down, or do you sit down potentially to review the financial health of the firm? And you may look at different numbers, you may look at things a little bit differently. We're really going to walk through some of the things that we believe are important, but how often do you do it? All right, I'm going to leave the poll up for 5 more seconds, and then I'll share the results. There will be 3 more polls after this. Okay, here are the results. So all the way from every day, biggest kind of meet is once a month or once a quarter, down to once a year. So folks are looking at things and at different frequencies. So all right, Amy. So people are looking at their financial health. Why are
At some
KPIs
frequency.
important? Yeah.
Yeah, so we've already stated this really, right? I mean, we need to understand where we're at and what are the direction that we want to head. And then are we hitting those goals? It's really easy to just go day to day and get done what needs to get done, right? It's really easy to work in your firms and not necessarily work on them. It's easy to get just sucked into what needs to get done. What we need to stepping back and analyzing, are we on the correct path? Do our numbers reflect the work that we've been putting in? Do they reflect the goals that we've set? So it's also important, inside of the accounting industry, there's a lot of M&A happening. And so we have PE coming in and just some of the things that are being analyzed by outside investors that are coming into the accounting industry. It's important to understand what they're looking at, not necessarily to say that that's the direction you're going, but it's just good to know what are they assessing when they look at a accounting firm, and is that a valuable accounting firm? These are businesses that you are growing. These are your investment in your future. And what do you want that to look like when you think about your succession plan? Regardless of where you're at, you need to think about, what does that succession plan look like? So this just helps while you're in it, and then also forward thinking. So let's just jump in. Let's dive into these and get you some ideas on maybe what you're already looking at, or maybe there's a couple of other KPIs that you want to add into it. And so looking inward, we could compare ourselves to other people all day long. You could compare yourselves to what I'm about to show you with DBA, but that doesn't necessarily mean that's what you should be doing, right? The path that DBA is on might look different than the path that you're on. And so looking inward, compare yourself to yourself. Look at what your prior year number was, look at what your prior quarter number was, right? To see if you want to grow, are you growing? Are you hitting that goal? Do you need to change something that's happening? So first one is gross revenue. So top line revenue. And current gross there, we like to look at things from a rolling 12. That encompasses a tax season in there, right? Like if you are doing tax, which I believe many of you do, just looking at everyone attending out there, uh, that just rolls in that tax season revenue if you have an influx of revenue coming in at that time. So rolling 12 is a great way to look at it and then compare it to the previous rolling 12, right? So ideally, if your goal is growth, then your gross revenue is trending upwards compared to the previous 12-month rolling period, right? And same is true, like think about how you're servicing your clients and you're looking at their financials and you're helping them to assess their businesses. Like typically what we're looking for in our client businesses is that they're growing, that top line revenue is growing. And then you also know that growing top line revenue just gives you the ability to have additional budget for expenses that you need to incur? Are we trying to bring on higher level team members to help us? Well, we need to have top line revenue in order to support that, right? And so lots of factors that go into that. Would you add anything to that, Ben?
No, Amy, I think you nailed it. I'll give people just a little bit of context where we're going to see some numbers momentarily. We'll also see some numbers as we go here. This information that we've collected is part of what at Collective we call our KPI survey. We've done it 2 times a year inside of Collective. Those times a year are like spring and let's say later fall, like after 10/15. They've corresponded with in-person events that we do. And so our members, complete that information and then we consolidate, calculate that information. And I see a number of familiar names inside the room here. I'll be sending that information out, everybody, but before the end of the week to you. But we tabulate this information and then in an anonymous way, we discuss it during our event. So 2 times a year, so call it spring, call it fall, is where we're capturing the information that we're going to show inside of our collective membership. And then we do discuss those things inside of those groups, like in an anonymous way. So, Amy, does that make sense?
Yeah, that's
Okay,
perfect.
cool.
Yeah, it's a good way to just look at other people's numbers, make yourself feel good about your numbers, push you to see where you need to grow, right? So for DBA, our current gross for the rolling 12 is 3.3. And then our prior was 2.8. I'm gonna round. So a big part of that increase, because that's about an 18% increase there. Uh, the biggest majority of that is a firm acquisition that we closed on at the end of January of 25, right? And so that was about a $600,000 practice that had a lot of billings during tax season that we were able to actually recoup down payment in the down payment that we made on that practice throughout the work that we did throughout tax season. So that's a huge part of our increase there. Now, before that, where we were trending for the last year or two was about a 5 to 6% increase in gross revenue. So we were still trending upwards, but not at such a high percentage, right? And so your change is going to be dependent on what's happening in your practice. Did you just acquire a practice? Did you just sell off a big chunk of clients that were no longer ideal clients for you, right? Like you'll see your change that you are expecting based on what has happened there. So that's one, always looking at gross revenue, right? It's a good gauge internally. Are we on track? Where do we want to be? The next series of KPIs that you will want to keep an eye on is monthly recurring revenue. Okay, so how much revenue is coming in from a client that is being serviced monthly or quarterly, if you're doing some quarterly clients, right? But like ideally, these are clients that are in a service agreement. We are billing them on a monthly basis, regardless of whether or not their work is happening. And what I mean by that is we have agreed to do services for them. They have to hold up their end of the bargain as well by giving us access to what we need in order to provide those services. We all know that if we have what we need, it's easy for us to get the work done. The hardest part is waiting on the client to get information. So if you are in a transition phase where you're trying to service clients monthly, but then the client still has to give you access to what you need, like there's still a requirement on their part. We don't have direct access to their bank accounts, their credit card accounts, to payroll information if we're not handling payroll, right? Then even if the client doesn't get us what we want, we're still billing them monthly. It's the service agreement that we have in place, right? And so this is ideally an ACH agreement that you are getting paid every month. It's not you're going to invoice them and wait for them to mail you a check or stop by the office and give you a check, right? So if they're in a service agreement, I just give you recommendations on how you're billing them. Really, if they're just in a service agreement, how you get paid is your call, but let's make it as easy as possible. So from an MRR standpoint, goal, continue to trend that number upwards. Ideally, your monthly recurring revenue covers your monthly recurring expenses. Like that is goal one. Like, let's continue to get to that. So if we looked at monthly recurring expenses, right, like payroll, what's our payroll? What's our overhead expenses that we have to pay every single month? If we can get those to wash, okay, now we can continue to grow monthly recurring revenue, right? That just gives us stable cash flow, ability to budget better with what's happening inside of the firm. Then we have number of active monthly recurring clients. So how many clients do you have under agreement? We've always talked, and if you've heard, listen to Marcus and Rachel's podcast, just the Dunbar's rule of 150 relationships, right? Like how many clients is the right number of clients for your firm? Um, you know, sometimes more isn't merrier. Uh, it's easier to go deeper with fewer clients. So what is that right number? Like what's the balance that you need inside of your firms? And then what's the average fee? In order to be able to provide the level of service that you would like to be able to give, that monthly fee needs to be high enough to support it. So in DBA's world, we operate under a team of three. A client that comes in and is serviced by DBA has a client service manager that handles all of their daily work, right? Day-to-day transactions, present tense, all the accounting and payroll. They have a client controller that handles past tense, which would be all the tax work, right? Tax returns, tax projections, anything involving tax. And then they have a client CFO, which is their future advisor. What is the direction that business is trying to go? Okay, let's help keep them on track for what they want to turn their business into. And so those team of three, that monthly fee needs to be able to support a team of three servicing that client, right? And so what we're ideally looking for is the monthly fee is trending upwards. One, because the value that you bring to your clients, even though sometimes it's hard for us to see it because it's easy for us, right? Like this is the gift that we've been given, is to understand numbers and to be able to organize financial information and establish processes so that there's procedures and policy in place and that we're accuracy of what we're looking at, right? Like that comes easy to us, but because it comes easy to us, we think it's easy for everyone. When in actuality, your vet client that you're servicing, what comes easy to them is understanding animals and helping and servicing those animals. It's not easy for them to run the financials of their practice because that's not the gift that they've been given, right? So like understanding where our value is and then charging appropriately for it so that we can have the right team in place in order to service them. What I miss, Ben?
I don't think you missed anything, Amy. If our goal is a high performing CAS firm, or if we want to be a high performing CAS firm, we are probably working hard to build our recurring revenue base. And three different things we can look at it, highest level, how much of our revenue is, recurring revenue. How many clients are we serving in those contracts or under agreements? I'd also say, what kinds of things are we doing for those clients too? People are a little different in what they package up, certainly. And then, ultimately, okay, if we have 20 clients, what's the average fee? Is it $500 a month? Is it $1,000 a month? Is it something else? So three different ways to look at, that important information. So I don't think you missed anything.
Perfect. So you can see just charts that I've placed out here with actual DBA figures. Our monthly recurring revenue for CAS clients has gone up. This is from the previous rolling 12, right? So we are up, about 23,000 a month there in our monthly recurring revenue. The number of active clients has also increased by about 20 clients there. Our average fee, though, has decreased slightly. And so, explanations for the decrease there would just be some clients churning out. We have existing clients adding real estate entities on top, which are lower fees than our normal average fee that we would issue for a new client coming on board. So we will work hard to get that number back up and to continue to increase our average fee. But something that I wanted to make sure that we shared, Ben, is, as we're looking at these numbers, how do we pull this information out of what we're looking at? And so, there's DBA bills everything out of QBO. So all of our invoicing is done through QBO. And it's very easy to look at the financial statements in QBO, right? And based on the service line of how it's set up, we have our CAS service line, that's all our monthly recurring. And then we have standalone service lines for entities, right? So if it's a business tax, individual tax, for any clients that are not on a monthly recurring fee. So from our acquisition, we have some annual only clients that are being billed. We had some exceptions to our services, just carry over from clients, legacy clients that are still clients, right? And so tracking that inside of QBO gives you an easy look at okay, how is top line revenue broken down here? But we are also, we utilize Canopy inside of DBA, and that allows us to tag clients for what service they're on. And we're also recording billing amounts in there for analytical purposes, right? Like how much time is the team spending on this client versus the monthly fee that we are billing them, did we quote that appropriately? Many of you can relate to that, right? Like pricing is an art. You're still working on your form, trying new techniques, seeing what works, right? So you have those analytics to be able to pull that information. Diana, great question. Does Canopy allow you to use data to bill through QBO? So you can integrate with QBO through Canopy to push the invoice information, right? Like you could invoice out of Canopy and push it over to QBO. We are not utilizing that inside of DBA. We started down that path and then just things got a little wonky with how it was sharing. And so we decided to shut it off. I believe there are others who are successfully doing it. And I've heard good things as they've navigated through doing that. So it's possible, Diana. Okay, let's continue on. Ben, you want me to pause for next polling question?
Let's do this slide, Amy, and then we'll do a poll.
Okay, perfect. All right, so EBOC, percentage of gross revenue. There's EBITDA, there's EBOC. Ben, this is all you. I'm just kidding.
No, well, people may already have figured it out, but what does EBOC stand for?
Earnings before owner's compensation. And so we are looking at earnings before owner's compensation because there's a lot of different ways that firms are calculating, what's their EBITDA percentage, what's included, what's not. So earnings before owner's compensation just felt like a level playing ground, right? That is, if you were to do a succession event, the earnings before owner's compensation is what you have been making in that business that you would need to replace, right? So if your earnings before owner's comp is $1 million, well, if you're about to do a succession event, maybe they're going to give you a salary to stay on, but you're used to having a business that has earned you $1 million before you've paid yourself, right? So we felt like it was a fair percentage to look at. The other one that is very important is just production hours of partners, right? And so both of these factor into like what's the value of your firm is ultimately what is being like looked at here. So if you are working 2,000 plus hours inside of your firm and you wanted to have a succession event, well, you have to be replaced, right? In order for somebody to come in and acquire your firm, um, if you're going to stay on, if you're not, whatever it might be, right? Like if you're doing the bulk of the work inside of your firm, then you have a job. You do not necessarily have a business that you are selling, right? And so the goal here is we want EBOC to trend up, right? What are the earnings before owner's compensation? We are trying to continue to increase the value of our firm. And then how many hours are we putting in as partners? And this is client billable hours, right? Like you're going to work on the business. You need to be helping. What's the vision? Let's make sure everybody understands the goals. Let's continue to keep our hands in everyone's backs and moving forward. And so if we look at DBA's numbers here, EBOC, we're trending up. So we've got a few percentage increase there over the previous 12-month rolling. And then partner hours, partner production hours, I went back 4 years because the comparison from like last year to this year looks like it's just going up for Marcus, right? Marcus is the only partner inside of DBA. And so you can see, 4 years ago, it was a little over 500 hours, cut in half. And then previous 12-month rolling, he was under 200 production hours. Um, doesn't mean that he didn't work a lot of other hours thinking about the business and working on the business. And then this last year is due to acquisition, right? So this last tax season, Marcus did work more, reviewed more tax returns because of the firm acquisition that just happened. So what we should see happen when we look at this again next year is that those hours are trending back down. So a blip right there, unless Marcus wants to do more tax work, and then we can continue to trend those hours up. But I think he'll probably say no there.
He says he's good.
Yeah, I see that. All right. So that was looking at some KPIs to just track internally. Okay. Compare yourself to yourself and make sure that you're looking at it. Most of you are, right? But make sure you're looking at it more than once a year. Once a year is okay. Twice a year is better. More frequent than that is also good though, because you get stuck in the day to day, like just trying to get things done, right? And so it's nice to just step back and be like, okay, yes, all of this effort is worth it. Like we are moving the firm forward. So, all right, Ben, I'll pause for our poll.
Yeah, take a breather, Amy. Yeah, just took us through some inward-looking metrics. So I'm just asking here, we're just asking here, what inward-looking metrics? Now I just listed some of the ones that we talked about. I didn't list the revenue ones, but what inward-looking metrics do you track? And you can certainly mark zero or more than one of these. It's a multiple answer one, everybody. This is polling question number 2. What metrics do you track of these? You may track other metrics, certainly. You could answer none of the above, or I don't know as well.
I think what's good about looking at production hours of partners is most of you probably aren't the greatest at tracking time. And so if at least you are only tracking time for client work that you're doing, then you'll be able to pull that metric, right? You want your team tracking all of their time, like how much is billable, how much is administrative, that you need to know. But if for yourself, you're just tracking the client work, you'll get a good gauge.
All right, so you can kind of see them going down, but amount of MRR definitely getting looked at by about 2/3 of folks, about half of folks looking at number of MRR clients, and then kind of hovering in there a little bit. So, okay. Thanks for sharing, everybody. I'll stop sharing. And Amy, back to you. We just looked inward, right? We're going along as a business, we're going along as a firm, and we're seeing how we're doing. In our case, really wanting to grow monthly recurring revenue is a goal. And so we track that and we watch it in a few different ways. So now if we look outward and we compare ourselves to others in the profession, what are some things we're looking at?
So the first couple that are really being looked at out there, right? Like outsiders looking in at accounting firms are analyzing just what's revenue per full-time equivalent. And so the goal is 200,000. Your revenue per FTE that you have inside of your firms, like typical standard is we're shooting for over 200. If you're not over 200 yet, that's fine. Like, where are you at? And then work to increase that. Fee increases, like, are you charging your clients enough is a really good thing to look at there. How much capacity do we have on the team? Is there opportunity for efficiencies, right? Like if our number is lower than 200, those are things that we could be looking at. And then revenue over production hours. So how much are we able to bill versus the time that it's taking us? This is in no way, shape, or form saying that you should bill by the hour, but this is using time data for those of you that track time to be able to analyze how much time are we spending compared to how much we're able to bill. And the goal there is 200, at least $200 an hour, right? Um, we track time inside of DBA because it's data that allows us to run analytics on what's capacity of team, are we efficient in what we're doing, have we billed appropriately, like have we quoted our fee appropriately, what kind of price increases do we need to do, right? Like time data gives us that information. So if you track time, you most certainly can get your revenue over production hours. If you don't track time, and that's like the side of the fence that you're on, right? Because it seems like nobody's really straddling the fence. You're either tracking it or you're not tracking it. You can at least get your revenue per FTE number. So ideally we look at both, but if we can get one, revenue per FTE will work as well. So again, revenue per FTE is just how much top line revenue do we have divided by the number of full-time equivalents that we have on the team, right? And again, are we billing appropriately? Are we utilizing technology? Do we have solid processes in place that we're able to follow so that realization on our clients continues to trend upwards, right? And so you can see for DBA, we're at about 227,000 per FTE. This actually went down from our rolling 12. And so we've had some team changes. We acquired a firm, we brought on additional team members, we've exited some team members, right? And so I will account that to like those changes just to some of the shifts that have happened over the last 12 months for us. Inside of collective. So Ben mentioned that, inside of collective, we track KPIs, we look at them twice a year at our events. We discuss, in an anonymous way, we discuss where everyone's at, we look at the information, and it's very helpful to just see where you're at, to see where others are at, and to kind of see like, we'll show the prior gross and the current gross, so you can just see how different firms have either grown significantly, maybe how they've reduced, intentionally they've reduced because they're trying to make some big changes and so they have to cut back before they build. So the average inside of collective is about 189,000 for revenue per FTE. So I thought that was interesting, Ben.
Yeah, and we got to cut in a couple more questions as well that are a little related there. So first of all, Amy, real quick, we'll take a couple. Where does DBA track their time? What?
Oh, great. Yeah, great question. So we are actually using Canopy for all time tracking. That's where we manage all of our work. What are all of the things that we need to do for every single client, who's doing them. And then we also record our billing data inside of QBO so that we can run analytics on it, right? Even though all invoices go to clients via QBO. I think we put all of our invoices in Canopy, if I said that correctly.
Yes, and then asking about FTEs, when we run our survey, we do ask folks to provide information on like team numbers in three different buckets. There's an owner bucket of people, there's an administrative bucket of people, and then there's a production bucket of people. So what we do is we really add those numbers together when we're arriving at, let's say, the average number of FTE people at a business. It's putting those three things together. Does that make sense, Amy?
Yeah, that makes sense. So we are including everyone in that revenue per FTE, right? Because it's not just your production staff that are in there. It is your administrative staff. Like you need administrative staff in order to take all of the administrative functions off of your production staff, right? But everybody needs to be included in that because we need the work that the production staff that they're doing needs to also be able to help carry the administrative staff that are there, right? Like it's a team effort. Admins takes as much as they can for the work that is repeatable, right? Like gathering documents from clients. Like we don't need our production staff to be dealing with uh, low value tasks that they could be spending their time doing higher value production work for clients on, right? Not saying that that task is not worth, it's not worthy, right? Like it needs to be done, just needs to be done by the right person, right? And so we need to include both of them in there. Revenue per production hour, we're at like $278 an hour, which is actually up from our last year. Our last year was about 275. So we've increased it by $3 an hour, which is good. Like it's trending upwards, which is what we want. And then the average inside of our collective community is $174 an hour. So again, trending up. I know, I've been in the accounting industry for a couple decades now. Same to you, Ben. It's crazy. Uh,
It's hard to believe I just turned 26, but
I know, I don't. We were young, we were young when we started. So I just remember though, the number, like 10 years ago, and maybe not exactly, but it was like 150. We were like 150 is how much we want to be revenue over production hour, right? And that just like it's up over 200 now, right? So that's trending upwards also. So again, get a good idea of where you're at, and then you can keep this one as one to look at as you review your KPIs. Okay, let's get into a couple of other important ones. So labor as a percentage of gross and technology costs, right? So labor, we have teams in order to help us do the work. If we're a solopreneur, okay, great. We don't have a labor percentage, but our technology costs are maybe higher, right? Because we're leaning more on technology. So these two are here. We're not going to get away from technology, right? Like our fees aren't going to decrease on the technology side. That will continue to increase. What will be helpful there is as we continue to evaluate what we're using, how many different solutions are we using? Have we signed up for a subscription that we aren't using anymore, but we're still paying for, right? Like those are things that we need to be looking at. But I kind of put both of these up here because if one is high, the other one is likely lower. And if one is lower, the other one is likely higher, right? Labor as a percentage of gross revenue, under 50%. If you think like traditional thought of a third, a third, a third. So we have a third labor, a third overhead, and a third going to the bottom line. And so that's roughly, we want to be under 50% labor. Ideally, we're below that. And then technology costs, I mean, again, it's going to continue to grow. The standard that we've seen across the industry over the last few years here has been like below 12%, right? And so you could look at like what do you include in technology? That's always a debate. Because it's a percentage of gross, you really should be comparing apples to apples. So if you roll your technology fees for your clients into their fee, well, that's hitting top line revenue. And so that percentage is still the same. If you don't roll it into their fee and the client pays it themselves, then you don't have that expense in technology costs, nor are you billing them extra for it. So, uh, DBA numbers, we are about 39% for labor, which is up from last year. We were about 35% last year. So again, we've had acquisition, team member changes. We've also hired a director of technology in there to help with technology, which could be the factor for both of these percentages here. And that our technology costs as a percentage of gross, we've been changing our infrastructure on the back end. We're at 9.2%. We were at 8.4%. So we are increasing a little bit there, but technology will continue to increase. We just want to make sure that we are using it effectively. And then collective average has been, we're about 36% is the average for labor, which would be right around there, right? Like a third, a third, a third, which I just
Mm-hmm.
discussed. And then technology is about 8.4% is the average inside the collective. So staying right around there, right? Some people are really low. It'd be interesting, what's your technology as a percentage of gross for you that are listening, if you're looking at that.
Yeah, to state the obvious, each firm is their own firm, and each firm's numbers tell their story. So you'll see some firms with a higher labor percentage. You'll see some firms with a very low technology cost percentage, So, and
Mhm.
there's reasons for everything. And there's obviously variation from firm to firm, Some firms spending 5% on technology and some firms spending 15% on technology, So that's
Right.
really where you start to dig in, How are you spending your money? How are you investing it?
Yeah, exactly. Review those expenses too every year, right? I mean, this is the time of the year that we get hit with all of our software renewals are all coming in, have already started coming in, right? Like coming out of tax season, most of the vendors in the tax space are now hitting you up to pay for your next year fees and stuff. And so just really assessing, what are you using? What is necessary? Um, app fatigue is a conversation that everyone's having or has had in the industry, and just how much are we using and how much do we really need to use? So good things to think about. Okay, another one is just MRR as a percentage of gross revenue. So we've talked about like what's your monthly recurring revenue. You can look at it annualized, you can look at it on a monthly basis, right? Like I told you in the beginning of the session here, if your monthly recurring revenue could cover your monthly recurring expenses, wouldn't that make running your firm easier, right? In order to make decisions, to have budget, to determine just what is possible. Do we need additional team members? What's the direction that we're trying to go? Another way to look at this is just what's your percentage of gross revenue? What is made up with MRR? And we're staying steady right now at about 68%. But I went back and looked through past years of DBA because I was curious, right? I like numbers and I like seeing trends. And so way back in 2017, it was flip-flopped, maybe even a little bit higher here in that tax or the annual percentage of gross was significantly higher than the monthly recurring percentage, right? And so slowly over the years have been working to shift that number so that it is now the opposite. MRR is higher, tax is lower. Now, tax will always be a thing for DBA, right? Tax isn't bad. It's just how much, and I call it tax, but like how much annual revenue is the right amount of revenue. And so really gaining clarity on that and what are you going to say no to, understanding that you can't say yes to everything and change the course of your firm, right? If you've said yes to everything up to this point and you don't like where you're at and you want more monthly recurring revenue, but you've built an annual shop, um, then what are we saying no to so that we can start to shift that and the future of the firm and increase our monthly recurring revenue and therefore increase the percentage that it represents of our gross. So you got to say no to some things. You can't say yes to everything, right? Like average inside of collective right now is about 47%. So of the firms inside of collective that responded to the KPI survey, so that was about 40 firms represented across the country, they're sitting at about half of their revenue is annual and half of their revenue is monthly recurring. So. All right, Ben, you
Let's do,
asked.
we're almost, we got about 8 minutes left, Amy. I'm gonna jump in before we do just our short last little segment here. And maybe you already guessed it, but here's poll three. What outward looking metrics do you track? And again, I've just listed some of the things that we've discussed that we believe are important. And again, you can mark all that apply or may not apply. So Amy, I'll have this poll up for just a little bit of time here.
I would check all of those boxes. I mean, except for the bottom two.
All right, I'm gonna leave the poll up for just another 5 seconds, everyone. So if you haven't voted or you haven't answered it, please do that now.
You
Uh,
know, the
yep, go
big,
ahead, Amy.
I was just gonna share, like the big one when we have a lot of monthly recurring revenue now. We're kind of holding steady where we're at. And so, but that shift, as we were working through that shift, was incentivizing that shift with the team. And so when it back, 2017 was like the aha moment of like, oh crap, we got to do something different. And then starting to work that way. Um, for a few years in there, the incentive was for every new monthly recurring client that came on, 1 month of their fees went into a bonus pool that got divvied out to the team. And so just an idea for you out there as you're like working through that shift, right? Like incentivize the goals that you have for the firm to get everyone behind those goals.
Labor as labor cost is kind of top of the list here.
Mhm.
Second, technology costs, people tracking those big costs, revenue per FTE, and then a revenue per production hour. And MRR is a percentage of gross revenue overall. Those that kind of rounds out the top of the
Yeah.
list. So, all right, Amy, and we just have one more poll to go, but do you want to take us through this last section?
Yeah. So just when to look at your KPIs, right? Ben, you asked the question earlier. And so a lot of people are either, once a year, quarterly, or monthly were the most popular answers there. Goal here would just be every 3 months, right? Every quarter, let's assess this and just see what's happening, look at it from a rolling 12 as you're looking at these numbers, right? Because then you're encompassing an entire year in those numbers, which makes it easier when you really think about like, okay, well, I have tax revenue that comes in at this time, so it should be higher. So
Every 3 months, that's what we recommend. So I will, Amy, there's a kind of they're all good questions, another good question. So I'm going to put the fourth poll up, everyone. And Amy and I talked a little bit about this at the beginning, but Amy, do you mind looking at that question there in terms of managing
sure.
tax season and MRR?
Yeah, great question, DJ. How do you manage tax season when the whole yearly work shows up in addition to the MRR work? Yes, that is a great question, right? That transition period is definitely not easy. And so the example that I just gave, as we were making that transition and continuing to service monthly clients, like priority should be there on monthly. They're paying you a monthly service fee, right? In order to do their work, we need to get them done first before we switch to annual. It's a lot of work on the team. And so that incentive to take any new monthly client that came in, you could do a month of fees. I've heard firms go up to 3 months of fees, goes into a bonus pool to pay out for the additional work that everyone puts forth in order to make that happen, right? What will slowly start to happen though then is, okay, we need to transition more of those annual clients to monthly agreements, right? Let's service them monthly so we don't have so much annual work and so much work to put forth, right? Like if we're maintaining this client's information all year long, tax season's not that difficult. There's a little bit of extra work there, right? But it's really not that difficult because we've gotten all of their books have been closed all year long, right? We close the year, we review things, and we're processing a return. It should not take the 12 hours that it would take to clean up an annual client's information in order to get their tax return processed. So, but then you just start to slowly transition and do some of those clients no longer fit inside of the firm, right? How can we um, use technology to help us? Do we need additional team members? So hopefully that answers your question for you, DJ.
All right, I'm gonna close this poll up in a couple seconds. Most everybody's voted. Okay, so here's just the final results. Um, Quarterly, 2 times a year, once a year, that encompasses almost everyone in the room. And so we've got a few folks outside of that, but people are definitely having their firm planning meetings. And that's something that Amy and I talked about the other day. Just, certainly we feel the importance of getting everyone together, making sure the firm's on the phone, on the same page, reiterating goals and projects that the firm already has. And then if there are new projects, new initiatives, something new for this year, we are really calling this time of year improvement season, leaning into that. What can we improve? What can we get done in advance of, let's say, September and October, and certainly by the end of the year, hopefully. So, Amy, back to you as we tie the loop.
Yeah, I have just what gets measured gets managed, right? Age old saying, we've all heard it. And so tracking those KPIs, looking at them, thinking about incentives to put in place to help you move the needle on some of the goals that you have is also, what I'll leave you with is what you're measuring is what you're going to manage and what you're going to make change happen on.
Good slide to end on for a KPI centric webinar. So,
It's good one.
yeah. Yeah, so the information that Amy talked through and that we talked through today was really collected as part of our collective member survey, of which DBA is a participant in that. Of course, we do that. We've done it a couple times a year in conjunction with our on-premise events. We just finished up an on-premise event, which I know some of the folks in here were at the beginning of May. We'll have our second event, on-premise event, in the back half of October. So if you'd like to get involved with us, we'd love to see you at that as a member. And then also, Amy's got our website up here. If you're interested in, being a part of, our KPI survey and kind of helping you to track that information inside of your firm, that is part of our rhythm here inside a collective. So check out our website. There's a contact button in there if you want to set up a time to talk with us. We would love to talk to you. We'd love to hear from you. Amy, anything else?
It was great talking to all of you and Ben being here with you, just talking through KPIs. So good luck, everyone. Enjoy the rest of your day.
Thanks, everybody. Take care.